Did you know that 25% or greater of home sellers drop their price in most metro areas across the country in June? I didn't know that, but it doesn't come as any surprise. So welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. Today is July the 29th. The month is almost over. Randy Patrick here putting the realism back in real estate because we do need a dose of that from time to time, don't we? This video is brought to you by our friends at Foreclosure.com. If you're looking to find out what's going on in your neighborhood, your neck of the woods, and you want to check out the distressed property listings, go to gethousingdata.com. That's gethousingdata.com. That's my affiliate link with Foreclosure.com. It'll take you to the site. It's my affiliate link. You can sign up, 7-day free trial, check out what's going on. Again, it's a very inexpensive way to see the distressed properties. They're the number one provider of distressed property listings across the U.S. You can see what's happening in your neighborhood and make decisions as to what you want to do with the real estate market and how you want to participate in it. Now, of course, the big news of the past couple of days was, the Fed did increase their interest rates. Obviously, they made a 75 basis point hike the other day. And, which clearly, will that disrupt mortgage rates? Well, that remains to be seen. Chances are it probably will in some factor. Mortgage rates went down just before they made the announcement. Maybe it was to cushion the blow, who knows? But I would expect that rates will continue to increase as time goes on. Powell also put another 75 basis point hike on the table for September. So the Fed pretty much has come out, saying we need to curb inflation. We need to squash inflation. They're going to be raising interest rates as a mechanism to do that. Also remember that last month, what did the Fed talk about? Talked about resetting the housing market. So part of this inflation will also be affected by the reset of the housing market, which to me means that they want prices to come down. So what they're doing is making it more difficult for the average wage earner to purchase a home because median home prices have far outpaced median wage increases. So therefore, they're trying to bring it in line. Sellers will have to reduce price, more inventory will come on, et cetera, et cetera. We know how that plays out. Now, that's why I think that really, we're in a situation now where the world's changing. A lot of investors I'm talking to are starting to market distressed properties. A lot of people I'm working with now are saying, let's advance the projects that we were speaking of. And really, it's time. Like, things are happening now. We've waited for a number of years. Would have happened sooner. COVID kind of got in the way, gave us a little 2-year reprieve, helped some people out for sure. But in the end, it's now time to sort of ante up and take care of the things we need to take care of. So it's time to get involved. If you've talked to me before, reach out. Reason being, I'm going forward with all my plans right now because I know what I'm doing. My partners and arrangements that I have are given the green light to say, let's go for everything right now. Basically, it's on, like game on, guys, right? So jump in on my short sale program. It's the last sort of chance you're going to have. It's migrating to a new thing called Foreclosure Fortunes, which will be a more broader-based program, different components to it. So the best value right now is the short sale stuff. You'll be migrated to the new stuff, but you get in now, better price, better benefits, better access to mentoring, stuff like that. So reach out to me. Let's get that done next couple of days because it's going to no longer exist. And we're moving forward with a lot of different plans right now. So anyway, what we also didn't talk about this week was Case-Shiller. Case-Shiller is released the last Tuesday of every month. So guess what? I didn't talk about last Tuesday. I want to talk about the foreclosure increases that were 440% year over year. I thought that was a little more interesting because Case-Shiller right now has become actually kind of dull. Okay, so basically, annual home price gain was 19.7 in May. Realize that Case-Shiller does report on the month, a couple months in arrears. We'll talk about it in a second here. Tampa, Miami, and Dallas were the, I guess you could say, the highest year-over-year gains. Dallas pops 30% for the first time in a while. Again, Dallas made its way into the top three, and prices continue strongest in the South and Southeast, which recorded 30.7% year-over-year gains. We've noted previously that mortgage financing has become more expensive as the Federal Reserve ratchets up interest rates, a process that was ongoing as our May data was gathered. Accordingly, a more challenging macroeconomic environment may not support extraordinary home price growth for much longer. So even the Case-Shiller folks are kind of going, you know what? We kind of see the writing on the wall. Now, one thing I do always kind of mention is that, Robert Shiller, who's, co-creator of Case-Shiller, sometimes does or rarely comments on stuff now. So, I think that he just doesn't comment for obvious reasons because it usually sends markets into a frenzy when he does make his economic predictions. So we haven't heard from him in a long time. We'll see if he raises his head and talks about stuff. Here is the typical graph of the history of Case-Shiller. And obviously the sort of hump in the middle there, the middle of the graph is the 2006 peak. You can see that there's three lines, a 10-city index, a 20-city composite index, and the dark, thick line is the national index. Well, you can see we had our peak in 2006. We had our trough in 2012. It had sort of a linear growth phase, from 2011, 12 to about 2018, 19. Then we kind of went up a little tighter on the curve, and we went more exponential. So that's sort of where we can say we have housing bubble because we're kind of exponential on that home price appreciation in a very short period of time. To sort of put this in perspective, well, 2006 was the peak, previous peak, July 2006. The trough was February 2012. And we are now 65.7% greater than the 2006 peak. I've circled that's the far right of the graph there from peak, 65.7%. So almost 66% greater than the 2006 peak. So if we were calling it a bubble back then, we can kind of call it a bubble right now. That's how I kind of look at things. And clearly, is this happening? Well, home price appreciation has not kept up with wage increases. The two are very distorted and out of sync, and therefore, people now are having a hard time purchasing. That's why we're seeing some changes in the market. All right. Hey, guys, if you appreciate the information I talk about and stuff on my channel, please do me a favor and subscribe. I'd really appreciate that. And if you already are a subscriber or think you are, please check it out and resubscribe because I lose subscribers every day. My battle with the man, on this channel. So anyway, appreciate it if you'd resubscribe. Thank you very much. Appreciate your patronage and the views. Okay, so interesting here. This came out with wolfstreet.com. Basically, why Case-Shiller is kind of it's sort of what people look at to really gauge the home market and see where things are going, but it does lag behind. It lags 2 months. So when we look at May's data, we're looking at it here in the month of July, end of July. So we're about a 2-month lag. Now, NAR, National Association of Realtors, typically we've already seen June's data. So it's that's existing homes. This is home sales across the board, essentially. But realize that that the information in Case-Shiller consists of a 3-month average of closed home sales that were entered into public records. So it doesn't have to be MLS based, could be private sales, off market sales, whatever, but entered into public records for March, April, and May of deals that were made a few weeks earlier, roughly February, March, and April. So basically what we have here is kind of like this period of time that moves forward every month, and there's an averaging that goes on here. So obviously it's more of a sophisticated calculation. So realize it's not just the next month, okay? It takes a couple months for these guys to figure it out and kind of complete, the calculation. So we're always in a lag situation. That's why when we talk about Case-Shiller now, it's not that interesting because, it's kind of like we're talking, May still had increases, right? 19.7%. That was down the previous month. So there still was double-digit home price appreciation across the board. But, it's still too early for Case-Shiller to see some of the effects that are happening right now in today's marketplace. Real estate's always, past tense, not real time, unfortunately. Okay, so as we move on, here is what we all want to talk about here. So look, we got Atlanta at 26.3, Boston 15.7, Charlotte 26.4, Chicago 12.9, Cleveland at 14.3% year over year, Dallas number 3 position at 30.8 year over year, Denver 22.2, Detroit 15%, Vegas 27.4, LA 22.1, Miami number 2 position 34.0, Minneapolis 11.5, New York 14.5, Phoenix 29.7. Phoenix actually used to be 30 some odd months in top position. It dropped from being over 30% for the first time. Very interesting. Portland 17.4, San Diego 25.6, San Fran 20.9, Seattle 23.4, Tampa, where I live, 36.1, and Washington 12.2%. So you can see that The lowest is Washington at what, 12.2%, still showing double-digit year-over-year appreciation. But as I just mentioned, that's great because we're looking back a couple months. We'll start to see changes going forward for June, July, and as time goes on, even though we're waiting a couple months for it, we'll start to see some changes happening in the marketplace. Trust me, it will catch up. Now, but this is where the headline I talked about here, going over 25% of home sellers dropped their price in June in most metro areas. So, as I said, we're coming off another great month on Case-Shiller out of May, but we're looking at June. What happens in sort of May, June, July, part of August? I call it the summer selling season. Most people typically put their home up for sale in that time frame. They want to sell, they want to relocate, they want to buy, they want to move, they put their kids in new schools, the whole bit. So it's typically the most brisk or most busy time of year in the real estate world process, so to speak here. But interesting enough that based on I guess you could say home buyer or lack of home buyer confidence, because home buyers are saying it's the worst time to buy right now. Obviously, interest rates that have risen from being in the low threes or sort of high to mid twos, it's now high fives, over six in some cases. And guess what? People are going, I can't afford that property. So all these issues where, hey, keep buying, keep bidding, whatever, that's sort of gone now, right? Well, look at this. Shares of homes with a price drop in the month of June. All right, Boise, 61.5% of homes had a price drop. Denver, 55%. Salt Lake, 51%. Tacoma, Washington, 49%. Grand Rapids, 49%. Sacramento, 48%. So look at that. I mean, so clearly, some of these like Boise and Denver, Salt Lake, very hot markets. But if they're now reducing, so we're talking listings that are saying, okay, we got to reduce price point. That's a huge amount. So over 60% of the deals in Boise are actually getting price reductions, which is pretty wild, which means a lot of hot air is going to come out of some of these markets here. Now, let's take a look at, we obviously went to Sacramento. Seattle was up there, 46, Portland, Tampa, yep, even though we have, again, Case-Shiller showing big numbers, but the next month we got lots of price reductions. We'll see how that plays out. Indianapolis, 44%, Phoenix, 43%, San Diego, 43%, Stockton, California, almost 43%, Austin, Texas, another great appreciation place, 41%. Now, commentary here, home sellers are contending with a rapidly changing market, and they are, especially in places where they're used to neighbors' homes getting multiple offers and selling for more than asking price. So guess what? You're used to going, wow, the neighbor down the street, one day on market, they had, 20 offers and they got 50 grand over list price. Oh my goodness. So that bar is pretty high, and that bar has been raised by the past couple of years, we'll call it real life scenarios. So expectations probably placed on, sellers by real estate agents in the market are pretty darn high, which, here we are in a changing environment, and you're just not going to get that anymore. What was a complete seller's market is starting to shift to a buyer's market now. And you know what? Last month, with respect to inventory, we were just shy across the board on a national basis. We were just shy of 3 months of inventory, which means it's increasing every month now. So homeowners, there's more properties coming on the board, which means people want to sell, or they maybe want to sell because they feel that if they don't sell now, they're going to miss the opportunity and prices will drop. They'll miss that equity, which makes sense. Now, remember, typically real estate, I don't know who it is. I call it pundits or whatever. Someone somewhere said, 6 months of inventory is what we call a balanced market. So, and now just so you understand what inventory means. So, we don't talk about number of homes for sale. We talk about months of inventory. So basically that means if no new listings came on the market today, all the existing listings would be sold within a period of about 3 months. That's how they look at it. So obviously new listings come on every month, etc. So the more months of inventory, the more balanced the market. Obviously less is seller's market, greater is buyer's market. From a new home sales perspective, I mentioned last video that it's about 9.3 months now. So they're over. It's actually a buyer's market for new home purchases as well too. So to sort of round this off, 18 metro areas, over 40% of sellers reduced prices. In 73 metro areas, at least 30% of sellers reduced their price. This is a Redfin report. Redfin tracks 97 metro areas. So the top 97 or 100 or 100 or so areas in the country. But take a look at that. That's a lot of people who were reducing prices, and it's only in June. Okay, there's going to be more desperation coming on in July, and then what happens if you don't buy in July? Well, guess what? This is courtesy of Mishtalk. Go to mishtalk.com. Home prices have gotten so insane. This is barely a start to what's coming. And as no inflation, no bubble. Well, you know what? We all beg to differ here. But the comment, and why I put this up, because his commentary on this is so insane. This is barely a start to what's coming. So everybody who has some knowledge in the economy and home prices, whatever, realize that this is so unsustainable. This is ridiculous, and there has to be some sort of reduction in price, correction, almost a crash, to get this back down to earth where everybody can afford a property. So again, we're working towards that. All the stuff that's happening now, realize that that's before any foreclosures coming on the marketplace. So we're just on the tip of the iceberg of the next foreclosure tsunami coming, and all this is already going on. So it's only going to add fuel to the fire, which is kind of what we want. We want change in the marketplace. Now, how things are going. Well, NAR, National Association of Realtors, does have something that's called pending home sales. So pending home sales declined nearly 9% from May. So pending home sales is basically an index that is, what's under contract. That's forward-looking contracts. So pending home sales declined 9% from May, which means, there's less homes going under contract, which means less closings and sales for, June, July, whatever, right? Pending homes typically are, 30, 45 days, 60 days sales cycle once you're under contract. So if we've already got a 9% drop from May, that continues to drop as well too. So this is an early indicator of future closings or sales, which has dropped already. And also too, something I want to sort of just do a quick little blurb here on is that fewer homeowners repairing or maintaining homes. So part of the whole mainstream narrative is that, we have all this equity, trillions of equity, people who are facing foreclosure, forbearance issues, distress issues, they could just sell because guess what? They have all this equity. Well, you know what? Here's the problem is that, number one, if you're in distress and not paying your mortgage or have financial issues, you don't have the money to make repairs, to do those things. And this basically is saying that, a lot of people are not making repairs, especially lower income. A large share of homeowners, many of which are lower income, make fewer home repairs compared to higher income owners. The analysis found that 30% of lower income homeowners, those who make less than $32K annually, represent 48 million households, spent nothing on home maintenance in 2019. So, if you want to sell your home, as the media says, and get your premium top dollar in our, hugely appreciating marketplace, right? Well, you know what? If I'm a buyer, I want to see a new roof. I want to see new kitchens. I want to see updates. I want to see new bathrooms, right? Like you have to compete with other listings out there. Well, if you don't have the money, you can't compete, which means you're not going to get top dollar, which means dollar value is going to get compressed, which is happening right now. So it's being compressed from the bottom end, not paying your mortgage, not having the money to make improvements, and from the top end now, not having that premium offer come in. And also, as price points drop and interest rates increase and there's more competition from sellers, that top level number is getting compressed as well too. So you're going like this, and what do you have left? So it's not this sort of, idealistic, we'll just sell, everybody will walk away. That was maybe 6-7 months ago. Not anymore, guys, not anymore. So what was talked about then, by the people who call us all housing bubble bros is really changing right now, which, that's the way it is, guys. All right. So anyway, as I mentioned earlier, you know what? Don't hesitate. Get off the sidelines. It's time. Stuff's happening. And guys, what I want to tell you is that I'm involved in the real estate industry, right? I'm not just sitting here making comments. I'm doing stuff. I'm out there in the field. I'm in the streets. I'm talking to people. I'm getting businesses set up. We're doing all sorts of wild and wonderful things, and we're moving everything forward, and we're starting, a lot of guys I work with, investor groups, whatever, they know what they're doing. We know where we're going with all this. So stuff is being implemented and deployed right now. No one's waiting. Get ahead of the marketplace. That's why I always say, don't hesitate. Get ahead of the masses, right? I talked to you about this. Connect with me. I know I've spoken to a lot of people over the past few months about this, and a lot of people are on the sideline because, listen, I get it, all right? Sometimes you need to be convinced, or you got to see what's happening in the marketplace. If you don't see what's happening right now, then I don't know what else to tell you, because all signs point to what's happening legitimate, whether it's senior economists, whether it's foreclosure attorneys that file the foreclosures, people on the streets, real estate investors that do thousands of deals a year. That's who I listen to. That's where I get my intel, my information. That's why I'm confident where things are going forward. So jump on board. Let me know. I can help you do these things. All right. Anyway, guys, you want to reach me? That's my email. Make sure you send me your contact information. And yes, I'm doing this video a little earlier on a Friday because I know it's the weekend. I got a lot of stuff on the go here. I got lots to do. I'm writing, copy and script and programs and stuff all weekend. I'll be here. So if you want to reach out. Again, get in before it's too late, guys. All right. Anyway, thank you once again for the views, likes, comments. Please share the video with your family and friends. And you know what? If you're not a subscriber, please subscribe. I look forward to speaking with you guys when? Early next week. See ya.